Okay, it's time for the Personal Finance Corner, and as always, we've got our expert Dhirendra Kumar, CEO of Value Research, joining us here to take care of your personal finance queries. Dhirendra, today we're going to put the spotlight on IT funds, which are back in focus on the back of a weak currency. Over the last 1 year, the Nifty has returned about 4%, while tech funds have given a return of nearly 30%. They now top the chart for the highest returns of the last fortnight, last month, 6 months, whichever way you look at it. Do you believe there's a further upside for these funds?
Yes, there is a possible further upside for these funds simply because, rupee is depreciating and it continues to depreciate still. And, now the reconciliation is that it may not correct substantially. So this will actually boost the income of the earnings of the technology companies. That apart, this whole turnaround of IT, the Indian technology comeback has been entirely driven by the rupee depreciation. Besides that, the mood change about Infosys, that here was a outsized company which had a disproportionate weightage in the portfolio as well as the IT index. This was a struggling company, and suddenly people have, with change of guards, people have become optimistic, or that it could be on the a turnaround, or getting its mojo back could be around the corner. So that is something which has done the trick for IT. But I would say that despite these optimistic outlook for IT companies, I don't think investors should get into IT funds simply because the IT, if you own a mutual fund or if you have been doing your SIP, your 20-25% investment will be allocated to IT anyway. So you have a reasonable exposure, and buying any such fund right now will mean that you are actually overweighting, or you are going overweight on technology, and any such vehicle of targeted diversification proves to be extremely disadvantageous because these funds tend to be either at the bottom or the top of the pack, and things are cyclical. So keep away from something which is so concentrated.
Dhirendra, SBI IT has been the best performer amongst the technology funds, has been beating the Nifty on a regular basis as well. Its performance has been very impressive. If as an investor I want to add a technology specific exposure to my portfolio, is this the fund to use?
Yes, if you think that your portfolio is underweight on technology, or you just want to have you consciously want to have a marginally higher weight to technology companies, technology exposure in your equity portfolio, by all means, this fund has done exceedingly well, and has done well for a reason. It tactically, bets in a very meaningful manner, which has benefited this fund, and I'm hopeful that this fund continues its good work.
A second viewer query as well, Dhirendra, and today's query comes in from Vicky Pahuja. He has been investing in Reliance Banking Fund for the last 7 months. He wants to know if he should continue his investments.
Exactly the same thing what I was referring about IT funds, that it is a very mainstream sector. If you own mutual funds, if you invest in equity, you are likely to have reasonable exposure to banking stocks anyway. So if you own other funds, don't have it. If you don't have any, then a banking fund should certainly not be the only fund which you have. The only reason why one should have a banking fund or should be doing a SIP in banking fund, when you find that the other funds that you own are very low on banking. But I think, if economy does well, then only banks will do. I think it is a struggling time for them. It is better for most ordinary investors to diversify. On that count, I would say that keep away from banking fund.